market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, traders, of course, readying for the Fed's final policy decision of the year, with the central bank expected to cut 25 basis points. The focus likely to be on the outlook for next year as Donald Trump heads for the White House. Now, we're joined by Nataliia, Lipikhina, head of EMEA equity strategy at JPMorgan Private Bank, and Bloomberg's Michael Sika. Thank you both for joining us. I mean, it's a big day, Fed Day, last Fed decision of the year. I don't know whether it's almost a given that they cut, but there's going to be a lot of focus on the dot plot and what happens next.
Absolutely. Hello, Francine. Very nice to be back. We agree with the market. The market is pricing 25 bips cuts. We think that the Fed delivers. But as you mentioned, it's all about the next year. It's all about the growth expectations, but also the pace of the cuts going forward, because we think that probably they will go into the quarterly cuts next year. So we expect around 100 bips cuts in 2025.
Yeah, and inflation's a bit stickier than expected. Is this because of structural concerns? Is it going to be accelerated by what Donald Trump policies could look like? Or is it just that it's just tough to get to that last mile?
Well, I think the market is quite concerned about exactly what you said, the growth expectations. And this is the very stark difference between what we're seeing in Europe and in the United States. It's the growth differentiation. And we saw that in PMI's data this week, where European growth is quite weak and momentum is very weak, but the US market is still quite solid. Consumption is solid, the labor market is solid, and that's such a big difference.
Yeah, and Michael, that's also playing out in equities.
Yes, it's playing out in equities. But what we've been noticing lately is that the market has been slightly uneasy going to the Fed meeting. The breadth is narrowing very, very fast in the US. You had like 11 or 12 days of more decliners than advancers. It's like a very rare occurrence. The number of stocks above their 200-day moving average is plummeting. So the rally, which is still holding, is holding because of just a handful of stocks, mega caps. So we're back to that period where mega caps are driving the S&P 500 and keeping the gains, while the rest of the market is really uneasy. And that's because next year is a bit uncertain. We don't know how much the Fed's going to cut, what's the path going to be, what Donald Trump's going to do, how much inflationary are going to be the next policies. So there's a bit of uneasiness there.
Yeah, there's a lot of uncertainty, Nataliia, which is why, I mean, you're still positive on US. And when's the right entry point, though, for Europe? If you look at the two, it's still US exceptionalism. And Europe the valuations are nowhere near where they should be, probably.
Yeah, in our 2025 outlook, we actually upgraded the United States and we downgraded European markets. When you look into Europe, there are so many uncertainties and weakness. The economy is quite weak. We're still waiting to see what happens with the stimulus in China, tariff fears, but also political uncertainty. If we see that some of those factors are starting to change, this is where we may become more positive on Europe. But so far, we're not seeing that. And we're seeing a very big difference between earnings growth in the US and in Europe. In the US, for example, we expect another very strong year, double-digit earnings growth, which is quite strong compared to even long-term average in the United States.
But if you see a difference, I mean, if you look at the Fed and the fact that there's going to be many more cuts in Europe compared to the Fed, can you play that in any way in the markets?
Potentially, but we need to see what that actually means for the economy. For us, this is the most important anchor for the earnings. If economy is actually a bit more resilient next year, we may see a bit of a flows coming back to the region. But so far, we've seen that momentum is quite weak.
Michael, what are they saying about inflation? What are companies saying about inflation? Or are you seeing anything in earnings per share?
So at the moment, it's not a problem. It's like something, like it's a risk for next year. So we've seen there's a bit of tension in the UK, there's a bit of tension in Europe, but it's not like a massive worry so far. You were talking about rate cuts. So the ECB is expected to cut like at least twice as much as the Fed next year. And that could be like a tailwind for European stocks. But at the same time, when you have a central bank that is cutting really aggressively, it's never a great sign for your economy. It also means that they are really scared that the growth is going to plummet and they need to do something about it. And that will be seen on earnings. We're discussing about the earning growth forecast for next year. So far, Europe is still like expected to grow almost as fast as the US. That seems a bit far-fetched, especially if we're having that many cuts and the economy is not doing well.
Nataliia, one of the other themes that you've identified in your 2025 outlook is basically capital spending and capital investment. Where does that go to?
Yeah, we're seeing a lot of capital investment in 2025 in the areas like power, artificial intelligence. If you're looking into the US large cap stocks, they expect to spend another 250 billion next year. That's a very big spending. We think there are a lot of sectors that benefit from it. Technology is the one that stands out, but also sectors like industrials and utilities. So utilities is a new sector for us. We have upgraded it recently, and we think that the power demand has been quite stagnant in the last decades. And with the surgence of artificial intelligence, it just means that a lot of tech companies need a very reliable and carbon-free generation.
I mean, given all of these, I guess, crises or possible sources of volatility, how do you make sure that your portfolio is resilient for what could be a choppy year?
Absolutely. This is one of the most important themes that we identified in our outlook, portfolio resilience, especially after such a strong 2024. So we are talking to our clients about finding diversified asset classes, for example, alternatives, infrastructure, real estate. These asset classes can actually provide you from potential risks from inflation. So we think that it can be a nice source of additional income to your 60-40 portfolio.
Okay, wonderful. Thank you both for joining us today. Nataliia Lipikhina there from JPMorgan Private Bank, and Michael Psika, Bloomberg Senior Reporter for EMEA Equity and Market Strategy. Coming up, we speak with Thomas Buberl, the, of course, Chief Executive of AXA. He joins us for an exclusive conversation on the top concerns facing companies across the globe. That's coming up shortly, and this is Bloomberg. Welcome back, everybody. Now, the insurance giant AXA has released its 2024 Futures Risk Report with climate change, geopolitical instability and cybersecurity top of the list for the third consecutive year. Now, it comes with traders and policymakers navigating a period of heightened volatility ahead of a new administration about to enter the White House. Now, for more on all of this, Thomas Buberl, Chief Executive of AXA, joins us for an exclusive conversation. Thank you, Thomas, for joining us. I mean, there's a lot that could go right and there's a lot that could go wrong in 2025. What are you most worried about?
I'm worried about, good morning, Francine, I'm worried about the fact that we have so many risks and also so many new risks. If you look at Syria, for example, this wasn't on our agenda 6 months ago, and that those risks are so interlinked that it's very difficult to make projections now.
So what does that mean for risk-taking, but what does it mean also for the psyche of a lot of chief executives when it comes to spending and investment? Is there a collective kind of wait-and-see situation that means that there's going to be a bit of contraction?
At the moment, you see many questions and the desire to create some logic and structure in all of these risks, which is almost impossible. I mean, for our industry, this is good news because we have high customer demand and can help our customers in dealing with these issues. But what we need today is really the so what for. What does it mean for business? We understand the risks, but then what are the implications and what are also the second and third order implications? Those are not clear, and I think that's where we all need to work together now as a community of chief executives and politicians to find our way forward.
I mean, in France, it's complicated trying to find a government. We have a new prime minister. We don't exactly know how he'll move going forward. That's François Bayrou. Does this political uncertainty continue into 2025?
It will certainly continue because the key issue at the moment is that there is no majority in the parliament. So any new prime minister will have a difficulty of finding a majority and also in particular finding a majority for a budget that instills financial discipline. So, yeah, I do expect that this will continue. What it means for our business, I mean, AXA is in France, but AXA is not La France. And that's why, for example, we have 25% of our business in France, but only 15% of our investments. So we are a global business. And you see Moody's has, for example, downgraded France last Friday, but they confirmed our rating last night. So for us, this is a situation that is not comfortable, but is a situation as a global insurer that is absolutely bearable.
But what does it mean going forward? What do European businesses actually need in terms of investment to become more competitive and to really go on forth on the world stage?
I think Europe needs to wake up. Europe is surrounded by a lot of powers that have a very clear strategy and a very clear desire to succeed and to compete. And Europe is today still in a world of finding its destiny and finding its journey. And we need to wake up, we need to defend our model that has made us successful for such a long time, and need to be crystal clear what are our priorities and who is putting them in place. And this is what is missing today.
Yeah, but do you need a strong Franco-German axis to make sure that it's strong enough to hold, but also strong enough to do foreign policy, to do financial policy in relation to Donald Trump in the White House?
I would say you need all of the above. What has always worked in Europe is a strong Brussels that is oriented towards a common view of Europe, and strong chiefs in the different countries, presidents or chancellors, to also create the balance. We do not see that at the moment, and that's why also I believe that companies need to step up. The public-private partnership in discussion needs to get into a very different level.
Mario Draghi speaks about an 800 billion euro investment a year. How do you find that money?
So, I mean, first of all, I think this goes very much back to what I said earlier. This is that focus. So for the first time, I mean, Enrico Letta started it already, but for the first time, we have a number on the table. We have clear priorities on the table. So I'm a very big fan of this report. The question comes now how to implement it. And there as well, only leaving it to politicians is probably not the right solution. When you think about all the COP meetings, politicians have discussed and companies have mostly implemented. Why not finding the same logic in the famous 800 billion packet?
So you also, what does this all mean for actually the insurance industry? I know you sold parts of the business off. You'll get, of course, this money from the AXA EM sale to BNP. What will you do with that money? Do you want to grow yourself?
So first of all, I mean, this 800 billion or investments in Europe would mean good opportunities, because we've only sold the executing part of the investment decision, not the investment decision itself. Secondly, you're absolutely right. The sale will give us some money, which we will partially use to neutralize the dilution of earnings through share buyback, and there will be a little bit remaining, which we will use to strengthen the existing franchise.
In terms of what, M&A? So are you shopping around, and in what kind of markets?
Look, we have gone through a very profound transformation. We have a global AXA today that works very well. All of our plans are focused on organic growth. So we have no M&A budget, nor do we rely on M&A. If there is a good opportunity, we'll have a look at it, but there's no pressure.
But your deal with BNP seems to have kicked off something in terms of animal spirits in the asset management and insurance industry. Is that fair?
Yeah, that's fair, and I think it's also justified, because what you see in the asset management industry is a polarization of the industry. You see on the one hand that the liquid part is clearly shifting more towards passive and more towards size in passive, and you see that the illiquid part, so alternatives, real estate, private equity, private credit, is also shifting to franchises that offer all of them, and also very sizable. And so you cannot stay in the middle. And so we took the decision. We want to strengthen that business in Europe. We want to contribute to creating a European platform, and therefore the sale to BNP was the logical consequence.
Thomas, when you look at your top risks, I mean, again, what happens in 2025? There's cybersecurity, there's geopolitics. What are you most worried about that's outside of your control? And what are you most worried about that's inside your control?
So what's inside our control is our own risk-taking and is our own capacity and capability of execution. We have a clear plan that we need to put in place, and we are in control whether we do it or not. Where I'm mostly worried about is a risk that is not even so high on the agenda, and that is the risk of social cohesion. When you look today at the difficulties that we have around social cohesion and the broken social contract, and no attempt to rethink and renegotiate the social contract, this is what worries me most, far beyond geopolitics and cyber.
And does that get really much worse in 2025 if politicians don't think about it in the right way?
Obviously, because if you have budget shortages, you cannot distribute anymore the way you are. And if you look at our demography, if you look at our state of our health, you will see that things are worsening. I'll give you an example that shocked me personally. We are entering this segment in France because we want to make sure that everybody can have insurance. We've realized that 20% of all French can either not afford insurance because it's become too expensive, and or are excluded because they represent risks that are not desirable. And this will not lead us to a socially cohesive society.
There's a cyclone on the French island of Mayotte. How much is that going to cost?
Oh, it's far too early. I mean, we're still in the middle of understanding what has actually happened. The first visits have happened, but in France, the good thing is we have a good private partnership with the so-called Nat Cat pool.
Yeah.
So where we accumulate funds in times where we have no natural catastrophe events. That seems to be far away these days because they happen all the time. But then we also have a pot of money that we can use to help people in need. And if you look at the pictures, it's terrible to see what's happening.
Thomas Buberl, thank you so much for joining us. That was, of course, the Chief Executive Officer of AXA for an exclusive conversation here in London. Now, coming up, Nissan and Honda are exploring a merger to better compete in the global auto industry. So we'll discuss that next, the mega merger. This is Bloomberg. Well, shares in Nissan surged the most in at least 5 decades as Bloomberg learns that the automaker has become the latest buyout target in Japan. It's exploring a merger with Honda to better compete in the global auto industry. Now, Foxconn, meanwhile, has also approached Nissan to take a controlling stake in the company. Now, let's get more with Bloomberg's global car czar, Craig Trudell. Craig, thank you so much for joining us. I mean, this is huge. Like, how much of this was actually expected?
Yeah, I mean, to be clear, Nissan is not a sort of, prized asset for either of these companies. This is a matter of a company that's, deeply in trouble, that has had long-standing issues that I think, really started to rear their heads when Carlos Ghosn was pushed out, when he was trying to combine Renault and Nissan. And I think there was real concern in Japan about, just how damaging that was going to be. And so years ago, we knew that the Japanese government was looking at this idea of Nissan being resistant to combining with a foreign car maker, and seeing in Honda some potential for these two companies to potentially be good partners.
Craig, we're just seeing this Bloomberg headline, which your team, of course, chased and wrote up. But Nissan's biggest shareholder, Renault, is said to be open to Honda talks.
Yeah, and I think that makes a lot of sense because Renault and Nissan, of course, have had real issues in the years since Ghosn was pushed out. Renault still has a significant stake in Nissan. I think it's absolutely safe to say that these two have drifted apart in dramatic fashion, but they're still tied together by this really significant cross-shareholding. If you're Renault and you see some potential for that shareholding that is very depressed in value to recover a little bit by them ending up in the arms of a company that they're more willing to get taken over by, you maybe can recoup more of that value than you would otherwise.
Craig, in 20 seconds, I mean, does it make sense actually combining two companies that are not doing great?
I think it potentially can safeguard Japanese interests and remove the worst case scenario for Nissan. I do think there's some real questions about how competitive this combined company can be if there's not further rationalization. There's a lot to fix at Nissan.
Craig, thanks so much. Craig Trudell there with the very latest on this possible mega merger. Coming up, we talk about Russia and, of course, Ukraine. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, these are your top stories. Traders await the Fed's final decision of the year, pricing in a quarter-point cut. The focus will be on the rate path ahead. Bloomberg understands that Nissan's biggest shareholder, Renault, is open to merger talks with Honda, with iPhone maker Foxconn also on the hunt for a stake. Plus, UniCredit raises its stake in Commerzbank as the chief executive. Andrea Orcel keeps up his pursuit of the German lender. Now, onto politics, geopolitics, and Russian authorities have detained a Uzbekistan national on suspicion of killing a top general in a Moscow bomb attack. Now, Moscow says he'd been recruited by Ukrainian security services to carry out the assassination. Well, let's bring in Roz Matheson, Bloomberg's EMEA news director. Roz, thank you for joining us. So does this accusation point to a new phase in the war?
Well, it's interesting to see that Russia is now directly accusing Ukraine of being behind this attack, as you say, detaining an Uzbekistan national, saying he was passed a device by Ukraine's security services, that he rented a car with a surveillance camera so he could monitor the apartment that this general was in and then detonate the device, that he was promised safe passage and money if he did so. Of course, the source was telling us yesterday that Ukraine's security services did indeed carry out this assassination, which would be an escalation, obviously, in this conflict between Russia and Ukraine, inside Ukraine, where we see Ukrainian security services now targeting senior officials in the Russian military inside Russia itself. So obviously assassinating this Lieutenant General Kirillov in Moscow. So does that represent a change in tactics by Ukraine, possibly a move towards more of a decapitation strategy around senior figures in the Russian military, but again, also about just sort of strengthening Ukraine's position, sending a message to Moscow that as and when talks may happen on this conflict, as it seems to be heading towards, that Ukraine's going to come to that negotiation, at least with some of its own demands.
Ross, how significant is it if Donald Trump's special envoy does indeed travel to Russia?
Well, it's interesting to see this news that Keith Kellogg is saying that in next month, obviously around the time or after Trump's inauguration, that he's going to travel to Kiev and possibly also to European centres like London and so on, but that he'd be open potentially to visiting Moscow if an invitation was extended to him to do so. And that would be really significant because given the level of US sanctions on Russia, having a high-level US official travel there for meetings versus meeting Russian officials outside Russia. And what does that send in terms of a signal? Well, it shows again very clearly how much the incoming administration wants this war to be brought at least to a ceasefire, if not to a full halt and some kind of resolution, and concern, no doubt, that that would raise in Ukraine. Like, how much is Russia going to sway or try and sway the US on this in terms of their own position, what they would want from some kind of ceasefire deal? And again, the big question obviously being Ukrainian land. And does Russia, in a meeting like that, inside Russia, very much sort of push the US to agree to allow Russia to keep the land that it is occupying at the moment inside Ukraine? So it would be very, very interesting to see if something like that did actually happen.
Ross, thanks so much. Bloomberg's EMEA news director, Roz Matheson. Let's get more of Elisabeth Braw, senior fellow at the Atlantic Council. Elizabeth, thank you for joining us today. When you look at how Donald Trump can change actually what's going on in Ukraine, in which ways will it change it?
He is so idiosyncratic that he can say one day one thing one day, another thing the next day. But I think what's important about this assassination of the Russian general is that the Ukrainians are showing that they are not in a hopeless situation as it has seemed, or in a difficult situation as it has seemed recently. They are able to take the initiative in unexpected ways, and frankly, this is what Trump likes. He has said several times over the years he doesn't like losers, and Ukraine is showing they're not a loser. So I think this will influence how he thinks about Ukraine, right. and that really matters, because in his world, it really is what he thinks that matters.
And so was this a move to impress Donald Trump, or was this a move to embarrass the Russians?
It was both, and that's what makes it so clever, and also because it was so unexpected, because it brings the war closer to the Russian leadership, obviously, but also embarrasses them, because it's now clear to the whole world that the Russian authorities are not able to look after even their highest-ranking officials in their homes, and the walk to the car, which is where this general was assassinated.
How will Russia retaliate?
It will retaliate. Of course, it's difficult to predict where that will be, but clearly somewhere in Ukraine, clearly somewhere on the battlefield, the Ukrainians are not as innovative as the Ukrainians when it comes to thinking up unconventional moves in this war. So the Ukrainians thought up the incursion into Russia, completely taking the Russians by surprise. The Russians haven't been able to be as innovative, but we'll clearly see even more pressure on the battlefield. I don't think there are many countries that can help Russia in that effort. We saw them resorting to North Koreans recently. Syria is not going to be helping them. There are very few countries that can help them.
Elisabeth, when you look at the way forward, again, what will be the main thing that Volodymyr Zelensky wants to achieve? Because if he's so reliant on the U.S. right now, what's the way forward for him?
The way forward really is to get into Trump's good graces by showing that this is a fight worth investing in, because Trump has this almost visceral dislike of people and countries he perceives as losers. So if Zelensky can show that Ukraine has a chance of winning this war, of continuing to take the initiative, of surprising the Russians, that will impress Trump. That will convince him that it's worth keeping that steady supply up of weapons deliveries, which is what Ukraine needs.
But tactically, what's the best case scenario actually for Ukraine right now? That there's a peace deal that's also orchestrated by the U.S., or can they actually think of winning this?
I think the realization has set in that Ukraine may not get all the territory back that it had before Crimea was annexed by the Russians in 2014. And that is a very painful reality, but it's less painful than having to contemplate conceding territories lost since February 2022. I think one aspect or one little development, or not so little, one important development to watch is what happens in Germany. Right. How strong the AfD, how strongly it does in the next elections, because they feel very strongly that there should be talks between Russia and the United States in the first place, not involving Ukraine. So how well does the AfD do in the elections, and other parties that may support that sort of approach?
I was also quite perplexed at hearing about 50,000 North Korean troops, right, at the border enrolled by Russia. What's China's thinking on this?
China is the frustrated patron of North Korea, clearly North Korea's patron, but one that can't tell the North Koreans what to do. They strike their own deals, and then China has to just accept that that's what has been done. The North Koreans will have extracted a price for this, and that's why it's so important that South Korea remains stable, because we don't know what is coming South Korea's way, because the North Koreans will have received something from the Russians in return, and that something is going to be directed against South Korea.
I mean, I was thinking, I don't know whether, al-Assad actually is a distraction for Vladimir Putin in Ukraine, but does it really show the fact that he didn't support the Syrian president? Does it really show how weakened Putin is?
He's overextended, and this is the risk of invading another country. You are in charge of deciding whether to invade, but you are not in charge of deciding whether you'll win. You are one of two parties to that decision, and the other country can put up a bigger fight than you expected, and that is why Russia is now overextended and wasn't able to support Assad. It's looking weak as a result, but Putin clearly made the calculation that keeping Assad in power would be so resource intensive that it would affect Russia's ability to win the war in Ukraine.
So interesting. Thank you so much, Elisabeth Braw, there, for joining us today, the Senior Fellow at the Atlantic Council. Now, Israeli officials believe that a ceasefire in Gaza is more likely now than at any time in the past year, with a potential deal to free hostages and increase aid to the region. A working group from Israel is in Qatar to reestablish relations with mediators, and senior cabinet members have expressed optimism about a potential truce. Now we'll be speaking with the U.S. Secretary of State, Antony Blinken, about the Middle East as well as Ukraine as the foreign policy transition under a second Trump administration. Don't miss that interview tomorrow, 1:15 p.m. London time. Coming up, we'll dive deeper into the big banking story of the morning. Commerzbank shares rising as UniCredit hikes its stake to 28%. That's next, and this is Bloomberg. Well, Commerzbank shares have risen as UniCredit increased its holding in the company to about 28%. The move ratcheting up the chief executive under Orchal's pursuit of the German lender. Now let's get to Bloomberg's Claudia Cohen in Paris. Claudia, thank you for joining us. So will UniCredit offensive on Commerzbank wake up European banking consolidation?
Well, we think so. We think so because with the Orchal move, is going all out. Is going for Commerzbank. Despite we need to say that, despite the German government backlash a few months ago, maybe he's hoping that with the federal election in Germany in February, maybe we'll get more chance, and it's still on a local deal. In its Italian domestic market with Banco BPM. So the two main questions will be how will governments react, like the German government, the Italian government, and also the second one will be how the biggest European competitors will react, because as we recall, to talk about France, earlier in June this year, Jean-Laurent Bonnafé, BNP CEO, said that, he didn't think that European banking consolidation could happen. So like Orchal move is just disturbing all the CEO strategies in the banking sector.
So let's also shift focus to Crédit Agricole. They have a new chief executive. Who is he and what are his main challenges, Claudia?
Yeah, they do. So it's Olivier Gavalda. He's Crédit Agricole veteran. He's been there since, I think, around his 20 years old. So he worked at the regional banks, he knows the company extremely well. So it was kind of a natural choice for the company, I guess. And his main challenges would be that we need first to elaborate a 3-year strategic plan starting in 2025 in a really disturbing French market. And also, as we mentioned just now, we need to rethink Crédit Agricole's strategy in Europe, because Crédit Agricole has many interests in Italy, for instance. It's its biggest market after France.
So why has Moody's downgraded the French banks?
Well, it was quite of a predictable move, because obviously Moody's, they always want to keep a notch between the sovereign and the credit main bank, in the country. We saw that market didn't react that much to the news this morning, because obviously with all the political turmoil happening in France since the summer, a lot of it has been already integrated in bank stock. So we'll see. I would say that the bigger risks are more in the longer term, if the economy slows down, if households decide to save more, and if French companies decide to freeze investment next year.
Claudia, thanks so much for joining us. Claudia Cohen there on the very latest from Paris. Now, UK inflation risen to an 8-month high in November, drifting further above the Bank of England's 2% target and supporting expectations that it will hold interest rates at its final meeting of the year. Let's get more from Dan Hansen of Bloomberg Economics. Dan, we're here. It's like the final meeting. I don't know whether it's a good or a bad thing, but actually there's quite a lot of data to get through. What happens after tomorrow?
Yeah, there's been a lot this week, and obviously we'll get the final decision tomorrow. I mean, I think what we've had yesterday and today makes it almost certain it's a hold tomorrow.
Right.
So it's much more about what they say about the future, and even there, I don't think we're going to get a huge amount more than we got in November, to be honest with you. This idea about gradual cuts, all the data we've had over the past week and since November, it supports that view. So I think tomorrow is going to be, I know as a news organisation we're meant to make it quite interesting, but I think it's going to be quite boring, to be honest with you. They're going to sort of say, look, we're in a good place. We're going to look at it again in February when they have a new forecast as well. Yeah. We know they prefer to sort of move with that forecast in hand. So I think, for us at least, we're going to get a cut in February. That's the next point at which things move, and probably stick with quarterly cuts in 2025. I
mean, there was a big market move, right? My head was kind of spinning looking at market expectations.
Yeah, it was massive.
What happened?
I mean, it was a surprise. I mean, everyone thought wage growth was going to accelerate, just not to the extent that it did. And it was particularly the private sector number that jumped, and that's the thing that the Bank of England's really, really focused on. I mean, it felt to me outsized, and the reason I say that is because if you look back probably over the last 6 months or so, I'd say the bank has become increasingly insensitive to data surprises. They've been willing to look through. We've had upside and downside surprises over the past 6 months, as you do with all data. Yeah. And that's, if you think back to 2023, when they moved in response to some inflation surprises, we got a late cycle 50 basis point hike. We got a surprise hold in September 23. And that was on the back of data that sort of surprised the upside and to the downside, respectively. Over the course of, well, over the second half of this year, they've been a little bit more tolerant of data surprises and have been saying, you know, we've got a strategy. The data broadly supports that. And I think the data we've had over the past week and since November, as I say, supports that strategy still.
Then, I mean, how much will they, be influenced by what the Fed says today, longer terms of dot plots and expectations, given that you have a new U.S. administration that, frankly, could change everything for inflation? Oh,
yeah, absolutely. And I think the question for 2025 is going to be, not just for the Bank of England, but also for the Fed, is where's the end point? And this idea about the neutral rate that everyone gets very sort of het up about. This idea of the terminal rate, the rate that neither speeds up nor slows down the economy. And I think the risk is that is higher than everyone sort of would ever think. It's, perhaps closer to 4% than it is to, say, 3%, which is where the Fed's dot plot, its long-run projection is at the moment. It's closer to 3% at the moment. So I think that'll be the question. And because the UK is a price taker in global markets, where the Fed says neutral is really important for the Bank of England as well. So I think there's going to be a lot of focus on what the Fed says today and in January about how far they think they can cut rates in 2025, and the Bank of England will take a signal from that.
Dan, thank you so much. Dan Hansen there from Bloomberg Economics. Now, coming up, things go from bad to worse for Brazil's deepening fiscal crisis, with traders even piling into hedges against sovereign default. So we'll have a full roundup of the top stories on that. That's next, and this is Bloomberg.
I think they need to bring it down a little bit. They just have to be more careful because the economy is stronger than we thought 3 months ago, 6 months ago, but it still has potential weaknesses. You and I haven't even talked about what's going on outside the United States that could affect the United States. Not tariffs and stuff, but wars. What happened in the Middle East this week, what happened in Korea, what's happened in Germany. All these political changes could impact the United States.
Well, that was the Bank of America chief executive, Brian Moynihan, there speaking to our David Weston. Now, investors losing faith in the Brazilian government's ability to contain a deepening fiscal crisis. Traders piling into hedges against the sovereign default, with the sell-off actually extending across the country's currency, stocks and bonds. Well, let's bring in Creighton Harrison, Bloomberg's executive editor for Latin America. Creighton, thank you for joining us. This actually seems like it's really spiraled really quickly. So what's the background for the crisis, and why are investors so skeptical about President Lula?
Yeah, like many market sell-offs, these things tend to build up over time and then sort of pop all at once, right? And this has been one of those. Lula, in his first term, he's always been, of course, the consummate leftist. He believes in big social programs and lots of government spending. But when he was president the last time around, he sort of balanced that with some pragmatism, and markets grew to sort of understand and respect the way he could do that. There was hope when he came back to the presidency that he would continue in that vein, but there was also anxiety that maybe he wouldn't. And so those forces would sort of, push against each other throughout the first couple of years of his terms. He would say something that sounded too spendy and markets would freak out. Then the finance minister would go remind him that markets were freaking out, and he would sort of calibrate it. He has been calibrating less and less now. And over the past couple weeks, he presented the spending cut proposal that was supposed to calm markets, but he balanced it with a tax break for the less fortunate in Brazil. That freaked markets out and made it seem as if he wasn't serious about balancing the budget, which is sort of cascaded from there.
Creighton, the other thing is, Brazil's central bank is intervening quite aggressively.
Yes.
But it's not doing much for the currency.
No, $3 billion worth of intervention in the past 24 hours alone, I believe, and it barely budged the real. We're going to see what happens today very shortly. But what we're getting to and what the market is really concerned about is a term called fiscal dominance, which I'm sure you're familiar with. That just means there's only so much the central bank can do. That at the end of the day, what the market is concerned about is the government's ability to balance the budget, and only the government can really resolve it.
So what will it take for Brazilian markets to be, to rebound, I guess?
Well, Lula could pay attention to the markets. He has done so in the past and has, changed tack. And he could see the charts that I'm sure his finance minister and his central bank president are showing him, and decide to take a different course or moderate his language even a little bit about what he wants to do in the future. The problem is it's a little bit out of his hands. His spending bill is already in Congress. And, of course, there are lawmakers who are already, carving out some exceptions to the plan and in ways that would make it harder to rein in spending.
Okay, so watch the space.
Watch the space.
Creighton, thank you so much. Creighton Harrison there, Bloomberg's executive editor for Latin America. Now, tomorrow we'll also be speaking with the U.S. Secretary of State, Antony Blinken, about the Middle East and foreign policy under a Trump administration. So we'll see his thoughts as we near the transition with inauguration January 20th. Up next, Bloomberg Brief with Manus Cranny in New York. Of course, the big market event of, well, I'd say not the day, actually, I'd say probably of the month is the Fed. Not what happens today, but how they then lay out the rate path ahead for 2025. You can see markets for the moment a little bit tepid, waiting for more market updates and that dot plot from the Fed. This is Bloomberg.